Hello folks. So if you just watched the previous video, we looked at gold, and rather than jump to silver, I thought we'd hop to a stock. And of course, in this case, obviously we're looking at a silver stock. This is Fortuna Silver Mines. Um, there are only a few silver mines left, and so when we're looking at stocks in the silver sector, our choices are limited. And another factor we have to consider, so Fortuna is listed on a U.S. exchange. A lot of the stocks that we might choose to invest in are only listed on the Canadian exchanges, and some of the vehicles we might choose to use to purchase those stocks don't let us buy Canadian stocks, or we have to pay a premium. Some of the trading platforms, their trading cost on Canadian stocks just silly. Yeah, but so anyway, so Fortuna, it's a silver stock. It's on a U.S. exchange. Another factor, yeah, since just happened to notice. So notice that the current price is at 489. Some investment vehicles, managed funds, in whatever form they come, aren't able to invest in stocks below a certain threshold. And so $5 is a threshold where once this stock establishes itself above $5, there will be more buyers available. So a potential increase in demand when the stock pops above $5 a share, and of course we're right on the threshold of that. And so here in our monthly time frame, um, there are times when my eye sees a price channel, but I don't find the Andrews pitchfork that describes that price channel, and this is one of those cases. So in my eye tells me that price is in a downtrend in this channel here, but there's a possibility, actually I think it's a strong possibility as I look at it, um, that price has just popped out of this is basically a breakout trade, from this downtrending channel. And so, yeah, as far as a price forecast for Fortuna Silver Mines, I would suggest that it has just made a significant transition. And remember, we're talking about the monthly time frame. So, this is not a trivial, this isn't just price popping back and forth one way or the other. Um, this is a significant transition from a downtrend to an uptrend, and one of the ways we can validate the primary trend of a financial vehicle is by using the guideline or thumb rule that price rises in the direction of the primary trend. And so it's not real clear yet. We'll make this as a preliminary. Prices trending upwards. It isn't. Yeah, like I said, that's still a preliminary prognosis. But volume is rising, and I'm going to assume that price is on an uptrend, which would suggest volume rising in the direction of the primary trend, that the primary trend is up. We can see in this, we have a somewhat of a trading range. The top of that range just happens to be $6. The bottom is $2. And so a $4 trading range, yeah, for a long time, number of years, price basically just waffling sideways. Um, Anything else there? Um, Remember, one of the things we saw in the gold chart is that, again, volume rising in the direction of the primary trend. The general trend of volume in this stock, for Fortuna Silver Mines again, is upwards. And although price is flat, um, in my opinion, the precious metals are in a bull market, and this rising volume is just another indication of that. Let's talk about MACD. Um, so both of the MACD lines are below the center line, below zero. So price is in its bearish phase. So as conservative investors, when MACD is down below zero, um, we need to, if we're long the market, we need to really understand why are we long a market that's basically in bearish mode. Um, but now I believe we're in a transition phase where this stock is transitioning out of bear mode into bull mode, and this rising MACD is an indication of that, and that's what I'm talking about. Is so we can see MACD is bumping along a rising trend line there, and has the histogram has flipped positive. Bullish volume, rising stochastics, and anyway, this is Fortuna is showing some positive signs, and again, we're in the monthly time frame, so these are non-trivial changes. Um, as I stated in the video earlier today on gold, I like to think of the stochastics oscillator as a indication of price energy. And so, where some people might think, "Oh my God, this stochastics is horribly overbought," when I look at this, all it tells me is that price energy is very high. And so, if price wants to go up, if the primary trend of price is upwards, there is plenty of energy to make that happen. And that's how I would interpret what the stochastics are telling us right now, is that price energy is very high, and along with the other indications, price trend, primary price trend is up. And just, I'll show you a quick fork just because, and we'll probably see this in the lower time frames. Yeah, let me clean that up a little bit. Ching, ching. There we go. And so there's Andrew's pitchfork showing. I'll change the colors so it's a little bit clearer for this conversation. That's the change in trend that I'm talking about. And so that pink Andrew's pitchfork would be the suggestion of the new uptrend in Fortuna Silver Mines. Now let's pop down to, and again, I apologize, we're almost at 10 minutes in this video. Really didn't want to spend that much time. So now we're in our weekly time frame. Let's see, again, rising volume, which is a positive sign, more people interested in the bull market in precious metals. That rising volume is consistent with the rising trend in MACD. Slow stochastics oscillator is showing us that price energy is high. We got plenty of price energy to do whatever price wants to do. MACD, both indicators. Now there's a change. So remember, here in the monthly time frame, MACD is still down here in the bearish mode. Now when we drop down to our weekly time frame, MACD, both MACD lines are above zero in bullish mode, which that's a change. Let's see, we can see price playing with $5 level. Price has poked up above 5. Right now we're below 5. We can see that level has been played with, flirted with before. Again, bullish rise in volume, bullish trend in MACD. Let's drop down to the daily time frame. So I dropped the indicators here because I think just talking about price action is cleaner. And actually, let's get rid of these moving averages. Sometimes the moving averages don't, they're not really helpful. The only thing I would point out potentially here in the moving averages is that we have a downtrend. So the moving averages, and again, we're talking about the 50 and the 200-day moving averages, which those are the standard moving averages for the daily time frame. In general, they are trending downwards while price is bumping through this price channel. And then we get this sideways waffling, and the moving averages are showing us the waffling. But now, notice, and I'll draw the line so it's clear. So the 50-day moving average is now doing something different. It's not doing this waffle. See, it didn't turn down at this level for another oscillation sideways. It's continuing upwards, and of course, very obviously, price has broken out upwards through these resistance levels. And so when I see that, I look at, okay, what are our price targets? And in this case, I'm talking about the blue Andrews pitchfork now. And so the breakout that I'm referring to, price has broken above the upper median line of this Andrews pitchfork. And so from a Andrews pitchfork perspective, the next price target becomes the next median line or median line extension. If you want to be technical in the terminology, that is the first median line extension of this Andrews pitchfork, which is all well and good. Anyway, coincidentally, we have this horizontal support and resistance level and a round number at $6. And so, as price works its way higher, I'm guessing that we'll get a bump. We're going to test $6 again from below. And unless silver and gold are doing something spectacular, we'll probably get some sideways bumpy action before price is able to break higher. Once we get that break higher, $7 becomes the next obvious target. And so now let's clear out those moving averages. Let's drop down to, we're going on 15 minutes now. Yak, that's a mess. So let's just get rid of stochastics. We can see price energy is still high. I do, before we drop MACD, as I said in the gold video this morning, and here let me draw another horizontal line at this level. Yeah, there-ish. So MACD is not a bounded indicator by any means. Well, I mean, it just isn't. And so it can go to any extremes it wants to, but it tends to stay within a range. And so we have an example here of exactly that phenomena. So we can look at that's July of 2016. Yeah, July of 2016, and here we are in early July of 2020. So 4 years where MACD has stayed within this bounded range, although the indicator itself is unbounded. And so the only other point I would make here with this MACD is that it has had an opportunity to work off the overbought level. So if price wants to go higher from here, MACD is not at this overbought extreme, which for the last 4 years has stopped price from going higher. Let's get rid of MACD. It's cleaner to look at the price action, and this is the last chart we're going to look at. Let's talk just a little bit about finding price targets. So when we're dealing with well, it doesn't matter. In this case, we're looking at a silver stock. But anyway, we're trying to figure out what's our next price target. If we're going to go long, for example, in this stock, Fortuna, if we're going to go long, where are we looking to take profits? And so we got a couple of things going for us in this case. Obviously, we got the round number at $6. It's proven in the last 2 years that this is a resistance level. So reasonable for us to expect that it will act as a resistance level again. That's a logical place to take profits if we want to get long here. What we don't have drawn in here is that we're currently playing with, let's make that a horizontal line, and it's 5-ish. So close enough. So basically we're playing with the $5 level, trying to put that into the past. Once $5 is cleared, I would expect price to, it may only be a brief spike, but I would expect the next target to be $6. We've got this resistance from the Andrews Pitchfork median line, resistance at the $6 round number, which is also a proven resistance level within the last 2 years. Anyway, $6 is a logical price target. Another strategy, and this is a Tim Morge. So Tim Morge talks about crayon drawing, and so this is one of the techniques in crayon drawing. It's called double the range. And so in this case, we have this clear price channel that we've talked about in a couple of different time frames. And so when we're looking for a price target, it's not uncommon that a trading range will double. And so just as a, spitballing back of the napkin, where's price likely to go, double the range is not a bad place to start. And so that's what I'm depicting here. I draw a line between the trading range, and technically it should be a perpendicular line, and then I clone or duplicate, copy that line and move it up to the next, to find the next support resistance level. And so double the range, that's what I'm depicting here. And coincidentally, that double the range technique gives us a price target in the same range. Basically, we have a convergence of resistance within this zone. And so as traders, it's reasonable to assume that $6 is our next target. We probably want to be nimble, taking profits at that level. May only be a spike. And then the next question becomes, what's our entry strategy? I'm at 21 minutes. I tell you folks, I keep trying to do short videos, but they end up like this. Hopefully you found some value here. Have a fantastic 4th of July. And again, my thoughts are with everyone this weekend, and profitable trading.